Hey, welcome back, everyone. It's John from Rain King Insights. It's Friday, May 17th, 2024. Time for a general market update. Again, all of these updates are for educational purposes, and there's no recommendations of any specific securities or investing methods. Okay, we're going to go over the indices, going to talk about breadth. We're going to get into a bunch of charts, look at the leaders a little bit, and some names that are still of interest. And then we'll wrap up. Indices. So I've got the S&P 500 on the left and the NASDAQ composite on the right. On the S&P, we can see that bottom really occurred right at the 5,000 level. It held the retest. Then you can see here that after we had the CPI report, we gapped out to new highs on an increase in volume on Wednesday. Very positive action as we probe new highs. And you can also see that the net new highs in the lower indicator here is showing good positive increases. And we've had the dots mean that it's above 50 on a net basis. Now on the right side of the chart here is the NASDAQ. So the NASDAQ is actually the leading index right now. We had 3 different accumulation days as we came up the right side. We had an accumulation day here, an accumulation day here. A lot of conversation about, was this a follow-through day? But it definitely, either way, it was an accumulation day. These 3 indications were certainly an opportunity to start pilot positions and probing the market, and things did follow through. Officially, you could have called Wednesday the follow-through day. I will say that I mentioned before, I don't use a follow-through day when the correction in the indices is less than 8 to 12%. So I wasn't even really looking for a follow-through day. And for those of you that do follow the follow-through days religiously, I can't remember too many follow-through days that occurred at new highs. Just by definition, usually they're coming off a correction or a bear market, and they're usually somewhere between the day 4 through day 10 or 12. So this being the official follow-through day is certainly late in this instance. We did have a little stalling yesterday on volume, but the positive side is we've had 12 days in a row with net new highs. Now, albeit they're not increasing as dramatically as we see on the S&P, but 12 days in a row, we'll take it. We've had blue dots, meaning the net is over 50. So we like that. And probably most importantly, we finally got some volume to kick in. These accumulation days were on mediocre volume. So I wanted to switch and look at the Hang Seng Index. This has been the Asian markets have been in a decline for 1 to 2 years, depending on the index. And I think what's interesting here is the Hang Seng looks like it may have put in a bottom in late 2023. We had a rally off that bottom, pretty powerful, but it stalled out, and we came all the way back down here and you did a retest. So it looks like we had a successful retest of the low. And what also is impressive is now the index is starting to power up through, and you can see the red line, which is the 10-week moving average, has crossed above the 200-day moving average. I guess you call that a golden cross. So, and what's probably most important, if you start to look at a number of Asian and Chinese stocks, you'll see that some of them are acting much better. So this may be a source of ideas depending on your appetite for stocks from Asia or China. Now, speaking of China investments, here's David Tepper's portfolio. This is a recent release. He shows 7 Asian stocks with sizable positions. BABA has been revealed now in his report is his largest position at 12%. That's a big position. Now he also shows PTD, Baidu, JD. So he's got a number of stocks over in the Asian markets that he's got decent sized positions. Certainly BABA is a big position. You can see that he added almost 7 million shares. I believe that was in the first quarter. So some more evidence that maybe something's going on in Asia. A couple of the names that were on his list. Here's Alibaba, his biggest position. You can see that it went through its final kind of climax selling bottom, and it went sideways for a good 4 to 6 months here, a little shakeout. And you can see, as I mentioned in the index, look at the volume as this has started to really move with some gap ups, multiple gap ups, and some really monster volume coming into BABA. So interesting. Pinduoduo, PDD, is another online retailer, also showing some very good action on the right side of a base. You can see the big blue volume spikes. I will disclose that I have a position in Pinduoduo. So switching to sentiment, this is the American Association of Individual Investors, the sentiment survey as of Wednesday. And just looking back, you can see that a couple of weeks ago, we mentioned that the bears were, on May 1st, the bears were actually increasing. We had 32% bears on that day. And that was actually the day we had the accumulation day in the NASDAQ. So right as we were starting to rally, individuals were still pretty bearish. Now, in the last 2 weeks, we've had this rally. Now, interestingly enough, with the rally, the bears have shrunk, but really these bears have moved to the neutral area, not into the bullish camp yet. You can see here that the bulls didn't really change. Kind of the indecisive in the middle has grown a little bit and shrunk the bears. Interesting to look at the sentiment. Maybe there's some more juice to the rally. So let's see what happens. This is from Carson Research. This is just a look at bull markets. And, bull markets typically last 2 to 5 years, with bear markets lasting anywhere from 6 months to 18 months to maybe 2 years. So Carson Research is just looking at a number of bull markets here and how many months the bull market lasted. You can see here that, the average of the data shows 61 months, which is 5 years. You can notice that we're only 19 months into this market, so it's still a pretty young market in terms of bull. So that's interesting data. I also keep some data on this. This is actually bull bear cycles, similar data, just showing that after you have a decline, so if we took the 2007 to 2009 decline, the bear market of 57%, the ensuing bull market went up 400%. The 2020, we came down to a bear market of 35%. We had a 120% move. And we don't know where we are going to go with this one. We're in it right now, but you can see historically, you get some pretty good moves coming out of bear markets. So I want to move into the watch list quickly. I just wanted to hit this at a fairly high level. In looking at a lot of charts, I think these are the strongest leaders that are showing themselves at this point. ANET, Vertiv, Celestica, Nutanix, Embraer, Dell, Crowd, Qualcomm, CRS, TMDX, and App. These ones in black are ones that I currently have positions in. The next tier of stocks in terms of, I think, strength, I've shown here. Out of this group, I mentioned Pinduoduo is a stock that I own. You'll also notice that silver and some of the silver stocks are performing well in addition to this. And there's a number of interesting stocks that are kind of in bases, various stages of base patterns, DraftKings, Confluent, and some other companies. It's interesting, Western Digital and Seagate are actually hard disk drive makers, but they're coming up with a new technology that gets more storage onto their devices by using something called hammer technology, which is kind of a heat resistant technology to get more capacity out of disk drives. And so some of the old stalwart disk drives are coming to life with new products. And we're going to look at a few charts now. I just want to get a few charts. I don't want to cover the charts of the big leaders. You can look at them yourself. Maybe you own them. But I wanted to put a couple of names on here that haven't really broken out, but I think they're near some levels that they possibly could trigger some entries. So this is GitLab. This stock has really been beat up since its last earnings report. It had a massive gap down. You can see here, big high volume day, a high volume close, of which I've drawn this light blue line across the chart at 58.84. You can see basically, for the last about 3 or 4 months, the stock the last quarter has been basing, trying to find a bottom. Little rallies, you'll notice that the rally attempts keep running into this high volume close and meeting resistance, and they get turned away, got turned away, got turned away. and then it's been bottoming and tightening up a little bit. And you'll notice that it's just gotten above the 50-day. So it's reclaimed the 50-day, still has a lot of work to do. Interesting that the base lows were right around the round number of 50, which is kind of a psychological level. And it looks like it's going to try and make a run to this high volume close and try to work its way up the right side of a base. It's possible to use the high volume close as kind of a pivot point. I talk about that in the Rain King Insights course that'll be coming up in June and July. Could use that as a pivot and use some stops that are fairly tight. Now, the downside of this name is the relative strength line is really not showing anything impressive yet. It's still just meandering sideways, so it's not strong. Let's see how this thing can make a move up the right side of a base. Maybe it has some potential. Here's Neocrene Biosciences. This was one of my December picks for the year. It's pretty much gone sideways this year. It's been chopping around, but you'll notice that the stock has kind of have a coil triangle pattern right now with higher lows and lower highs. So it's kind of been in a process of gradually tightening. It's tried to break out a number of times. It couldn't break out here, got rejected. Tried to break out here, 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 numerous rejections. But each time the correction is kind of tightening. We're starting to get some support off to be 50-day moving average. And we've been seeing some real tight days on Thursday and today. If you are interested in this name, I think this simple downtrend line could work as an entry. Typically, I would enter right above this high. But given that the stock has had so many failures at breaking out, I've drawn this green line. I'd want to see this clear that to show me that the stock really is ready to go. But you could use that as a pivot. And I would probably use the low of the day of this bar today or yesterday as my stop loss. Again, the stock is showing lagging relative strength, so it's not the strongest. Maybe if it breaks out, it can turn around and make a move, but the RS line is certainly not very strong at the moment. Here's Sweet Green. I mentioned this a week ago as these failed shakeouts turned into a double bottom. We had a really violent shakeout here, which turned into a double bottom base. And then we had the earnings gap where the stock had a big, big gap up. And you can see a high volume close with massive volume. And what's interesting about it is we essentially have had inside days since creating this tight little pennant, which is a tight little consolidation of inside days. And you'll notice that the volume is really tapering off. So, to me, the odds favor this possibly will break out to the upside given just the positive momentum. But I think it's one that you might want to have your eye on if you're not in it already. Next one is CrowdStrike. This is a position that I've had since November. It's actually my biggest position, and I've been holding through this entire base. I did a couple little trims, but I've kept the bulk of my position. Now, what's got me interested again in the stock is, in this rally attempt, we recovered the high volume close from this really massive earnings gap day, which actually stalled out completely, but it was on very high volume. And I anticipated this to be resistance on the right side of this base. But since I cut this chart, it actually moved higher. We're up in the 340, 345 range already. So very positive move. And probably even more importantly is the volume has started to pick up on the right side of this structure. So CrowdStrike is coming back to life a little bit. And I would argue that it's probably the #1 cybersecurity stock. So I wanted to show it on the weekly chart just to show you why I didn't sell and why I held to this base. I'm using my 10-week moving average sell rules. And just as a nugget, when I did my study of the 55 greatest winners of all time from 2003 to 2020, one of the things I looked at was 10-week moving average breaks. And the big winning stocks, model book stocks, tend to run for 18 months to about 21, 22 months. So if you consider, I studied that in the first half of the move, how many times did the big model book stock break the 10-week moving average? And the average in the first half of the move is 1 time. And then the next question was, well, how many weeks can it stay below the line? The consecutive weeks below the 10-week moving average line in the first half of the move is 4 weeks. And you can see here that CrowdStrike actually had 5 weeks below the line. It did not trigger my sell rules because the volume really dried up. So it gave me the ability to hold the stock through this base, which certainly tested me. But the low volume really was a dry up. And the other thing I noticed when looking at model book stocks from these 55 greatest winners, in the first half of the move, before you get your first break of the 10-week, the research shows that the average move is 111% before you get the next base. And so what did CrowdStrike do? It had about 120% move. So it's kind of acting according to the script of some of the big model book stocks. We'll see what it can do. Earnings are coming up. As we all know, earnings have been crapshoots. Things have been torpedoed if the guidance is not good. So keep our fingers crossed that we can do something much stronger with CrowdStrike. So I want to continue here with one more time. I want to continue with one last piece of this to wrap up. So when we're looking at the summary of the week, you know, the S&P and the NASDAQ have reached all-time highs, which is actually very, very positive. We want to see if it sticks and we get some follow-through. That's always important. We don't want to flop over too quickly if things reverse, but we got to be flexible. The 20-day moving average, you know, we've been above the 20-day now for a while, almost over 10 days. So we're looking for the power trend to trigger, and I think it could trigger possibly next week. So we're looking at that to see if we get some real indication that the rally has legs. We've talked about the new highs. We've been over 50, and things have been more steady, which is good. So we're starting to see some steady accumulation. I would like to see the net number get much bigger than 50, but it's a good start. Leading stocks, I think we've gone over it. You know, I've put out at least 20 leading stocks that I think are already at new highs, and that's important. The best stocks hit new highs either before the index or concurrent with the index. So we're always trying to sort out what are, you know, there's probably 100 stocks that are good, but we want to find the best. So we're looking for the ones that are really the leadership. Exposure levels, I think it was a time to really get much more aggressive, particularly with the way the market shook off apparent bad news with the PPI report. I think exposure levels should be somewhere around 65 to 80, which is a pretty healthy increase. And as I mentioned, we're trying to identify the best. So, you know, sometimes you need to take some of your positions that are lagging, sell them off, and try to find a way to funnel that money into the leading stocks, the real leaders, and find good low risk entry points. So you have to exercise some patience. So quote of the week is from Dan Waldschmidt. He's an international business strategist. He's also an extreme athlete. He says, the only thing standing between you and outrageous success is continuous progress. As we all know, investing is incredibly challenging, and the best we can do is to continue to try and continuously get better and learn from the market and continue to make progress. So stay with it, be resilient, and keep following your system to improve your results. So Rain King Insight, just a quick update. I'm really handling some things with my mom. I'm targeting July 1st to kick this off. I think it's realistic, so I appreciate the patience. But if you're interested in any early bird specials I'll have a couple weeks before the kickoff, please send me an email to support@rainkinginsights.com. That's all the time I have for now. Have a wonderful weekend. That's the general market update for May 17th on Friday. See you all next week.